There was more money chasing Zambia's government bonds than the amount available on Friday, 21st August 2026. Government of the Republic of Zambia offered 6.3 billion kwacha in bonds, but investors submitted bids worth 8.6 billion kwacha. That is about 2.3 billion kwacha, more than government was looking to raise, representing an oversubscription of roughly 37%. In very simple terms, government said we want to borrow 6.3 billion kwacha. Investors responded, we are prepared to lend you 8.6 billion kwacha.
The oversubscription of our Zambian bond by 37% as compared to the undersubscription in April is a clear factor that foreign investors have given an endorsement to the election results.
This is the kind of market response being seen just days after President Hakainde Hichilema's re-election, as investors assess what the next 5 years could mean for Zambia's economy.
The $8.6 billion expectant to go into government paper in 2026 may have been on pause because of the general elections and presidential elections in August.
Joining us to explain what is happening in Zambia's financial markets is Dr. Lubinda Haabazoka, Associate Professor of Banking and Financial Economics and Director of the University of Zambia's Graduate School of Business. Dr. Haabazoka will help us understand the behavior of investors, the demand for government bonds, the local bond market, and what the 8.6 billion kwacha in bids tell us about Zambia's financial markets. Also joining the conversation is Mr. Yusuf Dodia, an economist who will help us look at the wider post-election economic environment and what the response from investors could mean for Zambia's economy going forward. The August auction did not happen in isolation.
Well, I think that the oversubscription of our Zambian bond by 37% as compared to the undersubscription in April is a clear factor that foreign investors have given an endorsement to the election results and to continuity in the way economic management of the country is happening. When you look at our earlier bonds, they were concerned as to the outcomes of the electoral process, because it's very difficult for investors to be able to predict as to the election results. But with this bond that has just come and coinciding with the election results, I think the picture is very clear that investors have endorsed that also in the next 5 years we are going to see stable macroeconomic factors, low inflation rates, we're going to see stable exchange rates and better economic management, and that's why people have, especially foreign investors, have committed their resources in investing in Zambian bonds.
Before the election, Zambia's kwacha denominated government bonds had already recorded a strong rally. Investors had been putting money into Zambian bonds and seeing their investment gain value. The latest auction is therefore another important development in a market that has already been attracting significant attention. Now the question is, why should Zambian citizens care?
There's a possibility of challenges in keeping a certain level of anxiety very low. And investors will be affected by this post-election anxiety. And I think it becomes important for government to make sure that this anxiety is kept as low as possible. We have always boasted as a country that we can have elections, and these elections are within one family called Zambia, and this Zambia elects a leadership which takes over the leadership of the country for 5 years, and as one Zambia, one nation, and a president and a government for all the people of Zambia. And so the challenge for Zambia is to actually deliver on this pronouncement that we make as a country. And to this effect, it becomes important to recognize that the monetary policy rate set by the Bank of Zambia of 13.5% is just there to ensure that interbank borrowing is kept at check, to make sure that banks continue to support each other, continue to support the financial sector, and ensure that the confidence in the banking sector remains strong.
These numbers are connected to the economy we live in. A government bond is simply a way for government to borrow money from investors for a defined period. Government pays interest and eventually retains the money according to the terms of the bond. The investors can be banks, pension funds, insurance companies, investment firms, and other eligible investors, including foreign investors. When demand is strong, government has more investors willing to provide financing.
I think that also the performance of offshore investors bringing in the money will have a positive impact on Zambia's exchange rates, because that is forex that is coming into the country. And also it is a clear factor that despite certain people claiming that, one or two negative voices as to how the election were conducted in Zambia will have a negative impact on, investor confidence. I think this is a quick rebuttal of what, those voices are saying. And it also can be witnessed by the many congratulatory messages, including from the USA, that we have received, and more to come, because other countries normally congratulate after, the inauguration ceremony. So overall, this, especially overwhelming participation from foreign investors is an endorsement that the Zambian economy continues booming, and is also a relief that, government is not competing with the private sector for resources, because banks are also known to love government paper because they are risk-free. So I think this is a great endorsement for the Republic of Zambia, and this gives hope for more things to come.
But strong demand does not mean government should borrow without limits. Zambia knows what happens when debt is poorly managed. This is where the past matters. Before 2021, Zambia accumulated a large debt burden, and in 2020, the country defaulted on its external debt. The years that followed were dominated by debt restructuring and negotiations with creditors. That is why the current bond market activity needs to be understood properly.
Of course, in order for Zambia to continue to see the Zambian kwacha increase in value, as it has adjusted in the last few weeks and where it has dropped in value, it becomes important to make sure that the export proceeds tracking framework continues to be applied by government, so that export earnings come into Zambia, recapitalize our banking system, and make money available to Zambian businesses to ensure that we grow the economy, we're able to collect more taxes as a government, and we're able to pay off not only the funding of the national budget, but also to pay off our dues in terms of debt servicing.
Zambia is still borrowing through government securities. The difference is that the country has gone through a major debt restructuring and is operating under a much more disciplined fiscal framework. So this is not a return to the borrowing pattern that led to the previous crisis. The important question is what government does with the financing and whether borrowing remains consistent with the country's ability to repay. Now, where does that money actually go? That could be your question.
Of course, we want to be able to see that government paper continues to be interesting to foreign investors. We see that government did put a stop on the issuance of 5-year bonds, but I think this is temporary. By the time we get to the end of the year or before the end of the year, we should be able to see 5-year bonds back on the market. We should be able to see that the yield, which shifted from somewhere around 17% to 16.5% on bonds, does not become unattractive because a 16.5% yield is very attractive for any kind of investment on government paper, which is always very, very secure. So going forwards, I think it becomes very, very important that we manage anxieties in our economy going forwards, that the post-election anxiety should be reduced as low as possible to ensure that at the end of the day, investors look at Zambia as a country that is stable, as a country that offers opportunities, as a country where one can make a profit on investment, and that as a country that you can look at medium to long-term investments which are only available in a country where there is outside investor confidence.
Government borrowing forms part of the way government finances its budget and manages its cash requirements.
And I think that the Bank of Zambia should reintroduce the 5-year bond, because that will help government mobilize the resources for infrastructure development, especially that now we have already dealt with our debt restructuring process. The economy is going to grow, and affordability to meet obligations by government has significantly increased.
Government resources can support public services, infrastructure, salaries, social programs, and other approved expenditure. There is also another side to the story. When government has a functioning domestic market where investors are willing to buy its securities, it has access to financing within Zambia's financial systems. The investors themselves are also putting their money to work. A pension fund can invest part of its assets in government bonds. A bank can invest. An insurance company can invest. An individual investor can also participate through the appropriate channels. So the bond market is not a distant world where only foreigners operate, not at all. It is part of the financial system that Zambians already participate in, often without even realizing it. Why is the election important? Investors were watching the 13th August 2026 election because they wanted to know whether Zambia's economic direction would continue. President Hakainde Hichilema's re-election provides that continuity. The August 21st bond auction came immediately afterwards. Government offered 6.3 billion kwacha. Investors submitted, guess what? 8.6 billion kwacha in bids. That does not mean every investor was voting for the president through the bond market. What it shows is that demand for Zambia's government securities was strong at the first auction after the election. That is an important market signal. So where does Zambia go from here? This is where the president's second term becomes important. The first term was heavily focused on fixing the problems that had already accumulated: debt restructuring, fiscal reforms, restoring confidence, and stabilizing the macroeconomic environment. The next stage is about what Zambia can build on that foundation. More investment, more production, more mining, more energy, more businesses, more jobs, and deeper financial markets that allow Zambian businesses to raise capital and expand. The bond rally and the August auction are early financial market signals, not proof that Zambia has already reached prosperity. They tell us that investors are currently willing to put substantial money into Zambian financial assets. The responsibility now is to protect that confidence and turn it into productive economic activity. The 37% oversubscription at the August 21st, 2026 government bond auction is an early sign of strong demand for Zambia's financial assets following President Hakainde Hichilema's re-election. The message from the market is clear. Investors are watching Zambia's economic direction and responding to the stability that has been created. Maintaining a peaceful political environment, economic stability, and confidence in the country's policies will be critical to attracting investment and turning that confidence into jobs, businesses, and sustained prosperity for Zambians.